right. Okay, perfect. Thank you very much. Yeah, hello everybody. Thanks for the CVA for organizing this event, and it's a big pleasure to moderate this VC panel. My name's Mark. I'm an internet entrepreneur since more than 20 years. Explored Bitcoin 10 years ago, today focusing on longevity, but that's a different topic. And it's a big pleasure to have the panel with you guys. I think it would make sense that everybody of you just briefly, in a few sentences, introduces himself and herself. And then we'll start a discussion. Eva, you want to go first?
Sure. Hello, everyone. My name is Eva Holzer. I'm the Chief Growth Officer at the Dfinity Foundation. Dfinity is the not-for-profit organization R&D arm behind the Internet Computer, or the Internet Computer Protocol, ICP, many of you might know. The Internet Computer is a Layer 1 blockchain, an open Layer 1 blockchain, focusing on Web3 with kind of an innovative angle where we say the blockchain should not only be the network, but the cloud as well. And we want to bring everything on-chain, including smart contracts and systems and even websites that can communicate with Web 2 and run in web speed. Yes.
So hi, I'm Luke, and on this panel I'm kind of the Schrodinger's cat of VC, because I'm the co-founder of Ariani, which is a company that does NFTs for luxury brands. We started this in 2017. We work with brands like Breitling, with Marc Piguet, with Moncler, and many others. So we've raised actually up to $30 million in both equity and token. So I have this experience on the other side of the table, but I'm actually on my way to the other side of the table because I'm joining Exxon, which is one of the top French VCs, traditional VCs, who did have some experience in crypto and Web3 with the seed investment. They led the seed investment in Ledger, invested more recently in CoinHouse, Dogami, and Request Network. But here the idea is I'm coming here to lead the Web3 investments on the existing funds, and to actually finally raise a fund that will be able to touch both equity and token, which is actually something quite rare from a French VC today, because of a regulatory framework that is a bit complicated, but that is actually finally opening up in France.
Yeah, and you told me that's literally a premiere, so it's not really official yet, so very happy that you share the news already.
Okay, congrats. Hello, everybody. My name is Matias. I'm the co-founder and CEO of Verum Capital, founded 5 years ago. Verum Capital is a venture capital, but also venture studio. What does that mean? We not only invest in companies, but we also design companies with very complex token economics, or DAOs, or DEXs, or whatever in the DeFi space. But then we also build them. We have 18 developers total in our company, in our network, and therefore we believe that our thesis is that the future of VC is not only to deploy capital, but actually also providing technology frameworks, but also design capabilities and a global network, maybe around market making or liquidity providing, etc. And I'm looking forward to discussing this further today.
Hi, I'm Zoe. I'm European Managing Partner for Apollo Capital. So we're Australia's leading crypto asset manager. We have four funds now. So we've got market neutral strategies, and we also have the early stage venture investing strategies. But in those, we do focus on tokens. So they become quite actively managed combination hedge fund strategies. So I've been in crypto from both the investor and the startup space for over 5 years now. And it's a great time to be involved right now.
Yeah, thanks a lot. Eva, I start with you. I mean, as I guess most people in the audience know, the Internet Computer Dfinity was one of the very well-known funded projects, and Andreessen Horowitz and literally the whole Silicon Valley crew was involved from day one. I mean, what's your perception? I mean, what changed now, looking back, when these guys joined literally your project and now you're allocating money yourself? I think that's something most people might not be familiar with. Maybe you can elaborate a little bit on why Dfinity, the Internet Computer, is now also kind of a venture capitalist in the whole crypto ecosystem.
Yeah, I think at the beginning it was obviously very nice to win the trust of those big VCs, and like investing them in the project meant some credibility, that gave us some credibility. And it's funny, what's changing right now is that this credibility, that we now provide them some sort of credibility. What do I mean with that? So yeah, I think we're now at the stage where the major, like, most known layer ones, they have launched their mainnet. So now projects start building. We see DAOs, we see like new projects coming in, building on those layer ones, and they are now in the focus, or like VC's focus now on them. And I think that is one of the biggest trends in that area, that you have those layer ones and you have players that are attached to them, such as a foundation. Matias mentioned the venture studio, so we kind of also provide a model or a program for people or groups, projects that build on the internet computer to help them with any sorts of questions when it comes to tokenization model, how does the business model look like, not only like the technical questions. And I think like this, we kind of ensure that they move towards the right direction, and once they're like start really operating and commercializing, they then go back to the VCs, or the VCs jump in then, and it's
you do
way later than it's supposed to be in like the early development of blockchain technology.
Yeah, and you do it completely in-house, right? So at this stage, it's fully own.
Yes.
Organized, yeah.
Yeah, but we also work with partner. We also looked at community members themselves and projects that they kind of provide also important infrastructure for those projects that now build on the internet computer. And our part is more like, our part will shift, obviously. At the moment, it's very much to see, okay, where are the gaps? One example is we now are building an SNS. This is a kind of a DAO that allows new projects to issue a token. And they can do that directly on our blockchain. That means if they tokenize something, it's already decentralized. So you don't have to go through this entire regulatory nightmare when you're like, okay, when I issue a token, how do I ensure that...
Yeah, it's a big ecosystem already from day one. Yeah.
And so what we try to really find out is like, where are the gaps, and how do we give them the right setup then to go back to VCs and find other fundings.
Okay, interesting. Yeah, look, I mean, we had a discussion right before the panel, right? You're an entrepreneur by heart, now moving, as you said yourself, on the other side. What made you literally, decide to now move more on the investment side?
Honestly, the frustration I had 4 years ago when we were trying to raise money, and we have a model where there's equity and tokens, and the big thing, and we're both in France and Switzerland. At the time, I was in Switzerland, but I was planning to move back to France to really lead this effort from France, and the setup did not really exist in France. Switzerland had a setup that was much clearer at the time. We were talking with both AMF in France and FINMA in Switzerland, and the FINMA was like, well, here's a framework to actually raise in both tokens and equity. In France, the AMF was like, oh, we're working on something, it's going to come really quick, 18 months and you're good. And like, that's not going to fly. And so it was kind of that frustration to have to, go around and not have this infrastructure that other countries have in place to really invest in this new technology. So when Cyril Bertrand, the managing partner of Exxon, did put as an individual in the ICO in token back in 2018 in Ariane, and every year I would ask him, when are you launching a crypto fund? It's like, well, when is Exxon actually investing in Ariane? When can you actually do it? And every time I was like, not yet, not yet, not yet. So I would tease him about how, old and really not innovative French VCs were. And finally, late last year, he came and was like, well, finally, we're finally going to be able to do it. And so, do you know someone who wants to do it with me? And I was like, maybe I'll do that.
So
really that frustration, and it's like, that's something that I wanted 4 years ago, and I'm happy that we're finally going to have it in France starting this summer.
Yeah, happy to hear more later. Matias, I mean, I remember when you started with Ethereum, there were not many crypto VCs, let's call them that way, in the space, right? And you're not just one of the first ones, but you're still here. So, I mean, how would you say the whole space, I mean, especially when you look back in these crazy ICO times, what was the main development in between, and especially what's now also the outlook as somebody in the space since 5 years.
Yeah, I think when we first started, which was at the end of 2017, it was a mess. Everything was a mess. Deploying capital back then meant you deploy capital and you don't really know what's coming out of it and what's happening. In the meantime, there has been a huge developer shortage. So a lot of these people or companies that needed investment, they also needed, okay, I need 6 Rust developers and I need 3 quants and I need somebody else here. So now the VCs often, they need to make sure that they don't just deploy capital, but they also really provide expertise in technology, quant, especially when we're looking, when you build a DEX, for example, when you build a derivative DEX, how much quantitative know-how you need for that, how much tech know-how you need to that. If you build an on-chain order book, for example, this is not that easy that a typical founding team, in my opinion, in our opinion, a typical founding team cannot really provide all the necessary know-how and resources from the beginning on. And that's where VCs come in. They see so many deals, and they are actually the first ones that should help. So that's in the design phase. If we look at the structuring phase, has anybody tried to structure a DAO legally in multiple jurisdictions? It's not that easy. So that's also where the VC with strong legal help should come in our opinion, and providing proper governance. Because what you know with a DAO, you write everything in smart contracts, and then it's live, and you cannot change anything unless the community votes for it. So you need to know the final setup already when you launch it. So which founding team knows already the final setup of their future company 5 years down the road? Nobody. I'm not saying that VCs know this better, but we see that really starting a company requires as many stakeholders, as many resources, as many eyes as possible. And then the money side, back then it was you provide money, and then, okay, there's an ICO happening, and there's a pump and dump game. Right now, okay, we have proper vesting periods and so on. But now when you invest money, if you launch a DEX, like what's happening on a DEX if you invest money in a DEX and you don't provide liquidity? Absolutely nothing is happening on this DEX. So you need a proper market maker, you need a liquidity provider, you need people around this that, legal counsels, etc., etc. So the investor of the nowadays investor needs to really be more founder savvy, tech savvy, needs to know what a proper governance, what a proper vesting period in a token world is, and so on. So I think we're moving away from the only providing capital to being a holistic, not a service provider, but a true partner. And nowadays it's very challenging. I think a lot of founding teams, they can pick which VC to work with. Mm-hmm. That was 2017, completely different. Now, strong founding teams with strong tech capabilities, they're the ones saying, no, I want to work with Sequoia, and I'm going to go with A16Z, etc. So now for small VCs, they have issues coming into these deals. So they need to actually add much more value. And
yeah, you bring a whole ecosystem, right? A little bit what you said as well, right? So, you have quite a unique structure with Apollo. I don't know if everybody is familiar with your organization, because you have mainly hedge funds, but also venture capital funds, right? So, what was the thinking behind? Because that's also, I think, a good example how the whole digital asset space is just different. Normally, you do either hedge funds or you have venture capital or private equity. And in the crypto ecosystem, you have quite a few players. They literally do a little bit of everything. I think one of the reasons is also because you have, by definition, equity and token, which already from day one puts you into some of a liquid venture capital market. But maybe you can a little bit elaborate on that, because I think that's quite unique.
Yeah, exactly. I think it comes from our team's experience both in the traditional financial markets as well as being founders in DeFi itself. And it also comes from the point that you made about investors being more actively involved in these protocols and supporting them in technical ways. So first of all, we started out doing early stage investing, so primarily focused on DeFi and infrastructure. And when stablecoins came about, because one of our first funds was a market, it was a multi-strategy, we were one of the first investors to get involved in stablecoins and provide the liquidity to support the protocols that we're investing in. So we spun that out into one of our market neutral funds, and that's how we ended up having 4 different strategies focused on liquidity provision for the companies that we're investing in, and therefore bridging the gaps between understanding them at a deep level and being able to support them. So, for example, one of the liquidity providers we provide capital to is decentralized insurance protocol. So now when we're investing in new startups, we can even make those connections for them, and we can advise them throughout the full stack of the DeFi and infrastructure ecosystem. So that's sort of where it comes from. It just is a holistic approach to investing in the space, I think, which makes sense when it's based on a deep understanding. And those connections between the entrepreneurs then tie into getting access to early stage deal flow, because they know you well from working with them as a partner and not just an investor.
Yeah, I saw there are quite a few also traditional VCs in the audience, so maybe it would be also interesting to understand a little bit better, I mean, especially for the ones who were in the space also from a more traditional side, what are the biggest differentiators? I mean, we heard it's about the ecosystem, it's about more than just putting money, and money doesn't mean automatically equity, also tokenomics understanding. So where do you see the biggest differences when you talk about blockchain or crypto VCs compared to pre-crypto times, the traditional ones?
Yeah, so maybe there's multiple ways in the crypto space how as a VC you can get exposure to this company. It can be really pure equity, which has been probably more 2017 VC style and traditional style. And then there's the token side, which is the second layer, a token that converts into equity upon a call. The third layer is really pure token, like a utility token. And the fourth layer is a governance token. So there's 4 different layers that a VC has to understand how to invest in, versus a traditional one typically goes in with some preferred shares and so on, and that's it. The second one is, if you then hold this token, if it's a governance token, you have a certain obligation. You need to vote on protocol updates. So imagine if you invest in a protocol, and this protocol proposes to the community, okay, do we do update number 1 or number 2? And you as a VC don't have any technical capabilities, so you need to rely on outside sources to tell you which votes to do. So as a VC, by nature, you need the technical capabilities, versus back in the day, traditional VCs, they just need them for due diligence purposes, versus right now, it's for maintenance and upgrade purposes, investing in a governance token.
Yeah, maybe just to visualize it, you told me the staff of your company, right? I think that's impressive to hear. I mean, how the company is split right now?
Yeah, I would say 70% roughly developers. Straight developers, smart contract, backend, frontend, UX, UI, and then some blockchain product owners, which are very challenging to find. And then, we have a legal side that everybody needs. We have a traditional investment side on the valuation, etc. And then the traditional business side. Because running due diligence of a governance token, you need to understand, okay, what is the legal structure? You need to understand, okay, this governance token, what does the community look like? Who is in the Telegram chat? Who are my co-investors? Are my co-investors, if they are big VCs in the US, do they have exposure to competitors or not? Is anybody doing market making? Is there anything, is there an algorithmic stablecoin involved that maybe might be attacked at some point, or is everything manually? There's so many different layers you need to look at before investing or working with them as a partner, and that has changed completely.
Yeah, I think it's impressive, 70%, right? I was quite surprised. Yeah.
Yeah, I totally agree. I think it's very, very complex, but also there, I think we kind of need to break that down in the future as well. What we see at the moment very often is that more and more Web 2 companies are now coming into Web 3, and they really think in the old world, but what they're lacking is exactly that kind of knowledge. They're like, okay, I think like in the internet computer case, it's like what we try to do is at least provide them an interface they know from Web 2 already, so that they have a single sign-on option, they have an identity they can use, they don't really have to interact with wallets, etc. So we try to give that at least from a UI perspective and a technical perspective, but still knowledge-wise, it's and regulatory. It's hugely complex, and especially those companies, they go to VCs and they say like, can you provide us with knowledge? How are these investment cycles? Because the volatility is another thing, right? They're really, especially now, very scared about what's happening, and that's also a key trend. They're now moving, like the ones that came in probably in the last 12 months, they're moving more and more out again because they're just very insecure. And so I guess to give that layer of security, we need those knowledgeable VCs or other company or DAO builders, studios, but at the same time we also have to make it way more like transparent, interoperable, easy to understand, etc. So the delegation issue, for example, what we did, we try to solve that we say, okay, if you don't have any knowledge, you can actually tell the staked ICP you have at the internet computer, they're called neurons. So you can actually say that my neurons follow your neurons because I know you're an expert, so you don't have to touch basically your neurons again, and you know, okay, it's in good hand because there is someone or a team that really knows what they're doing. And so these kind of mechanisms, I think they're going to be crucial going forward too, like especially for retail investor. If it's already complex for you guys with like that knowledge, I mean, imagine, what it is for others.
Further, right? Yeah. I don't know if you want to add something. I mean, I don't know how much insights you can share about the future structure of your crypto fund.
So of course we have a slight. I mean, I would of course agree that now, you know, smart money has to come with a bunch of help. The question is what kind of help as well. So Exxon has always had a startup success department, of course. It's about a third of the team, with both technical expertise, financial expertise, legal expertise. The big question for us is, and that's what I'm supposed to help bring as well, is the Web3 expertise and a lot of things you were talking about. But beyond that, the thesis of the fund is kind of the same thesis that we had when we started Ariani, which is like bridging the crypto world and the quote-unquote real world. Of course, today, you know, we do NFTs for luxury brands, and today it seems like obvious because like it seems like every other person is doing, every other luxury brand is doing NFTs. Back in 2018, it wasn't. It was really like we wanted to do something with NFTs, and we're trying to figure out what the best go-to-market was. And so that's really still the same spirit that we're going to try to go with Exxon, with of course also LPs that are quite, I think, different from a lot of the crypto native funds, because our LPs are more big institutions or corporate, like traditional corporate French and European companies. And what they're coming for here is not just like, okay, what is the next DEX or a thing that is not necessarily core to their business, but it's like, okay, what am I supposed to be exposed to? What am I supposed to understand for my business? When is actually Web3 going to touch my business? And so that's where I'm not quite sure we'll invest in the next Uniswap. You know, I'll be much more interested in seeing like how a Goldfinch or another actor like this can leverage DeFi to talk to the next 200 million or a billion people.
Yeah, I mean, maybe looking at the founders, I think there's no successful VC case if you don't have the right founders behind. I mean, you're all quite experienced in the whole crypto economy space. I mean, what would you say is different looking at the founders maybe 4 or 5 years ago, especially the whole wave of young motivated people joining during the whole ICO craze and the ones joining right now, especially because they maybe saw some of the cycles, as you mentioned. Sometimes if you enter the space in the wrong cycle, you see also a lot of people leaving again. I personally would say, being in the space since 10 years, the more cycles you see, the better and the more convinced you are. But what would you say when you look at cases right now as we speak? I mean, projects in your case or potential investment cases from your side. What kind of profile or founder you're looking for, and is it different than maybe 4 or 5 years ago?
if I can, jump in, I think 4 or 5 years ago, everybody still was like, okay, I'm going to look for a founder who has probably worked at a bank before, who has worked as an asset manager, who has gone to a decent university, etc. That's probably gave the people a bit more, they could sleep at night when they invested in these people. I can only speak for ourselves, but we don't invest in this type of people. We have many investments with people that never went to university, that don't know how to iron a shirt, that don't really know how, they've never gotten a haircut, etc., etc. So we don't really care about the profile towards the outside. We don't care. But we also have this in our company culture, like there's no hierarchy. We're not impressed by big names. We're not impressed by big companies. We're impressed by cool people and by cool ideas. And I think this is the type of founder that we're looking for. And I think that hopefully has changed over some time now, until today.
Yeah, we focus really on technical founders and teams who know the crypto space well. So especially at this point, for example, with DeFi 3.0, you've got a lot of founders or engineers that have been in the space for a long time and built a good track record, and you've almost got the PayPal mafia of crypto coming out. So there's a lot of good experience, which we do really look for. But on the other hand, we're also at this exciting time with NFTs, where crypto is finally, I think, at a point where it can really reach consumer applications and reach the masses through entertainment and things that most people are more passionate about. So Web2 entrepreneurs and founders have been excellent at user friendliness and building products out that people really enjoy using. So I think it's also, especially when you're looking at that space, good to have a balance and make sure that they do understand crypto and tokenomics at a deep level, but also, the go-to-market strategy and execution is so important because the industry moves so quickly that, you almost don't have the time to work things out at a slow pace. So we look for the balance of really understanding crypto deeply and having that technical expertise and being able to execute in a easy, user-friendly way these days.
Yeah, and I think from a really protocol perspective, what we see, and it's a very nice development. I mean, in the early days, it was more like it was more about infrastructure, I guess. And many techies, I think most of the thing came out of APFL or ETH. Or yesterday I had a chat with the guys from Swissquote, and they're like, "Did you know that our founders were from APFL, and that's why Swissquote went so early into crypto?" And I was like, "Oh wow, this is interesting." So I guess that is something that was there from the very beginning, and hasn't changed that much. But what is nice to see is, as the technology becomes more and more easy, I guess everyone of you knows now how to do an NFT, for example, or as it becomes easier and easier to handle the technology and have those interfaces where you don't have to be a programmer, you can go for low code or zero code even and have a seamless interface. With that, we see way more experts in their field coming, from the music industry or film industry. Now we now work with a project. They are for a long time in the film industry, and they were now just in Cannes presenting a new Netflix or a new platform that connects the film producer with the watcher directly.
Yeah,
what actually
case, yeah.
Exactly. And I think that is really, really strong, because at the end, and everybody's talking about what's going to be the killer dApp that will take on everything. I think at the end, it's really if we combine those knowledges, the technical one with the industry one, and not only banking industry, not only DeFi, but anything, I think then we see very, very strong projects coming up, and I guess that will give it an entirely new dynamic. And my feeling, I see that already coming. We have so many cool projects that are now evolving, and the founders, they are technical peoples, but they connect with non-technical people who want to solve something.
Yeah, yeah. Yeah, so bottom line, I mean, Matias, if I need money, I will never cut my hair again. That's also something interesting to learn. So maybe for the last 15 minutes, because we now also talked a little about the past, I think it would be also interesting, especially for the audience, and maybe we have a few minutes at the end to take some questions to get a little bit your perspective looking into the future. I mean, we're in a difficult cycle, I would say, not just in crypto, but in general. But also, as we all know, a lot of exciting fields happen, especially in times where there's maybe not at the peak of the cycle. So you really have only the passionate and convinced people working on new exciting projects. So what would you say, what do you see, let's say in a year from now when we would sit together again, all without haircut till then, what would you see happening till then? What's the hottest topic happening as we speak?
Yeah, I'll start here. So Q1 this year, there was 9.2 billion invested in venture capital. Q2, it was a bit less. There was a 38% downturn to last year. I think we now have around 62 unicorns globally in the space. And what's happening right now is, I mean, I can only speak to the VCs that I spoke to last week, for example, which was around 20. And we all talked about, okay, what we're doing, etc. And most of them said, okay, they're definitely taking a step back now. A lot of them, they have to clean up some of the mess that they have on their balance sheet, etc., because of we all know what happened. A lot of them also said, okay, we have to rethink what APY means to us. Because, you know, everybody right now, you see 165% APY on the Olympus DAO alike or whatever. People back then, they just threw money because, yeah, it's cool. But now people realize, okay, APY, you actually have to think if it makes sense, if the risk-reward balance is really, if the trade-off is there and if it makes sense for you. I think people will really rethink what APY means as a first step. Second is, a lot of VCs, they're not seeking for new investments, but they're doubling down on existing investments with strong founding teams. So that's exactly what Mark said again. Strong founding teams will actually benefit from a downwards trend. Same for us. We are convinced that, you know, this is just another one of these cycles, and everything will be fine. The strong founding teams will crystallize, and they will remain over the years, for the past 6-7 years, how they have been. And the ones that nobody wanted to work with anyways, they're gonna try something new and learn from the past. So I think overall, we are super excited about this situation right now, even though it's a difficult situation for all of us. But I think it's a time to focus on building. And this is also our company philosophy. You know, we focus on building. We're not focusing on just shouting it out to the world, what we do and here and there, but focus on building, and the rest will take care of itself. And I think in crypto, 90% of the companies out there, they're focusing on shouting things out to the world and 10% on building. I think this needs to be balanced 50-50, and then more and more investors will understand that they can also invest in some startups.
Yeah, on any other predictions, if you want to share? First of all, I couldn't agree more. I'm not sure if it's a prediction or if it's a hope.
Can be both, ideally together.
Yes, I think what's going to be interesting is right now we, actually since many years, we always talk about blockchain. What can blockchain do? And at some point, the technology should not be in the focus. At some point, I hope that we will see that this is really just going to be the technology. We're going to have Web3, real Web3, and on that Web3 is a new economy that is being built. So at the moment we have an economy and we have the internet, and they are somehow connected. But what Web3 is allowing, and metaverses and whatever, is to really create a new ecosystem. And with that, I hope that we're not going to need specialists like we are or like you are that understand the technology, but okay, how can this technology be connected with solving a problem, with and providing the interface to users that don't want to hold tokens or a wallet, but they want to use something encrypted, a DAO, and just without having any thought about tokenization, that kind of things. And I really hope that we will see those kind of industries on blockchain emerging, and that we more talk about, hey, how can what I said, movie industry be changed and disrupted, and what can you do there, and then like real utility and use cases and adoption, obviously.
Yeah, I think that was also the time where the internet became tangible, when people didn't care about what underlying protocol and browser, they just had real use cases behind, right?
Exactly.
So I'll piggyback on this. I mean, that this is exactly what what I was interested in when I started in Web3. This is the one-liner of the fund at Exxon. Once again, this is what our LPs are asking as well. A lot of them are asking some financial return, but also a lot of, okay, show me why Web3 is something that is actually going to be useful and not just 10,000% APY on a degen protocol. So that's, I think this period is actually is going to be good. Of course, I come from a different situation where I'm starting to deploy capital, so it's nice. I do not have anything to clean up, so it's a cleaner slate. And of course, valuations kind of coming back down, expectations from founders being brought back a little bit.
Great timing to start a new fund.
So it's a good moment for sure. But as you said, it's just another cycle. It's actually I think it's the best time to be a VC is during those cycles.
Yeah, I would agree. I think even with the use cases that we're seeing now, it's still always focused on the secondary market and the trading market and the price of everything, even art. And that'll always remain there in a way. But for us to really get to the next level means the focus on the primary market, on the real use of these assets, which will mean, it's not about the price. It's about the clothes and the art that people use and wear rather than them having it as an investable product. So I think that's the next stage that we really need to get to.
Yeah, definitely exciting times. Yeah, go ahead.
If I can just add to this. Real use cases. I think everybody has been talking about use cases for a century already about crypto, it seems like. And but yet, okay, there's very limited use cases out there. And I think what we have to realize is that corporate innovation does not work. It doesn't. So anybody that claims that innovation comes from the corporate side, I'm sorry, at least I disagree with you heavily. And why? Because of a very simple concept between Web 2 and Web 3 that a lot of people also don't understand, and this is called skeuomorphism. And I'm not an expert in skeuomorphism, but it's a design concept that states that you can only design and innovate something based on your previous experiences, based on what you've previously seen in an advanced technology. And so what a lot of corporates try to do, they try to take Web 2, they sprinkle some blockchain around it and claim they're a Web3 company. No, that's not how it is. Web3 completely disrupts. Web3 is a different type of governance. If you put a private blockchain in a corporate, that's not Web3, and let's stop trying to do this. So either you try to innovate properly, or you accept that you are really just trying to improve a small process through the blockchain, which is totally fine. But let's not be corporates and say we're Web3 companies. Innovation really happens in a much, much smaller scale, whether that's a small R&D division or a small startup, and so on. So I think that's something that the world hopefully will realize in the next 365 days.
Yeah, good point. I think it's now a good moment for the last 5 minutes. I think that's also possible to go to the audience and ask if there's any question in the room. I mean, take the opportunity. Yeah, Martin, go ahead.
I have a question for you, Matias. You mentioned before different ways to invest: equity, pure equity, governance token, other tokens. And I'm wondering how, in your investment case, if you combine these different solutions, if you don't see also conflict of interest, equity holder against or with token holder, how do you address this?
Yes, so in the traditional, in the DeFi space, and I'm not a lawyer, but I unfortunately have to work with a lot of lawyers, so...
Martin is one, so...
Perfect. You can teach me, perfect. So, I mean, obviously you have this foundation structure, you have a limited liability, maybe there's some co-ownership and whatnot. There's a lot of, if you create a DEX, some DEXs are created where you basically come on with only governance tokens, and others basically have a limited liability and a foundation, and you come in on the equity and on the token side. Then I fully agree that there's a conflict of interest between equity and token holders. The reason of that being that a lot of traditional investors still want something on paper. They want to have some sort of, okay, if there's a liquidation event, if there's something serious, if the tech IP is worth so much, I want something in a shell or in a company that I can claim as an investor. So we like the governance token approach, where really we invest in the governance token. That is our only exposure. That is the only way that we have a complete alignment of interest between the company and us. So we don't try to push one side higher than the other just because we hold more than the other. But yeah, we have seen a lot of conflicts of interest, especially with VCs. They just buy large positions and then they dump them, or they Anyways, I mean, you know that better than I do. But yeah, there is a conflict of interest. I don't have an answer how to solve this. I guess it's just educating founders better of how to legally structure something like this, that not in 1 year, they will wake up with a nightmare.
Yeah, we have another question from the first row. Go ahead, please.
Thank you. Have you thought about deploying capital towards real estate use cases? Or have you done so? Yes or no? And what would be the risks versus the opportunity in that asset?
Maybe to repeat, because I don't know if everybody can hear you without the microphone. Did you ever deploy money into the real estate field? So
Sorry, was it a question for me?
Any of you who has an opinion?
I will let others speak.
In Web3, Exxon in Web3 and PropTech, not yet, but they do have some positions in PropTech, but more on the technology to facilitate either access to property or to financial solutions. Centrifuge in Switzerland does something interesting around financing real estate. So there are things, definitely looking at it, but no, I haven't done any investment in it, really on Web3 and PropTech.
Maybe I can add to this. I do have a real estate company as well, where we invest in real estate. And yes, it has landed in my personal thoughts, okay, should I deploy capital via the blockchain? But to be honest, I wouldn't. Personally, if it depends on the structure. So if I just get exposure into real estate via an SPV or via a token, then I would rather do it via an REIT or in a direct investment. Because right now, to tokenize real estate doesn't add much value, because there's no liquidity, because you're clearly, you have a revenue stream from this real estate which derives it a security token, and therefore it cannot be traded properly, there's no liquidity, so why would you tokenize something? Just buy it, or do it via an REIT at the moment. But once the liquidity is there, then I would definitely do it.
Yeah, so I see the discussion I really liked, and we could have, I think, also continued, but unfortunately the time is gone. So thanks a lot for your contribution. Zoe, Matias, Luc, and Eva, it was a pleasure. Thank you very much.